Welcome to the life cycle of a trade, the series where we break down the thought process behind trade entry, trade adjustments, and closing order. In this video, I'm going to show you how to turn a broken wing butterfly into a risk-free butterfly. I'm looking at Tesla. It's tough to participate in such a move that we've had. So I'm looking at a broken wing butterfly on the upside. This does go into earnings, but it's a pretty wide butterfly out in the August expiration.
All right.
Buying the 260, selling two of the 275s, and buying one of the 300s. You know, Tesla's all-time high or at least 52-week high is right around 300. That's where your break even is here, or that's where your max risk is. 290 is your break even here. So if you're kind of playing for maybe a grind higher or sideways or no movement, you know, this is kind of a play on that. What's up, everyone? We've got an adjustment to make today here in our Tesla position. So we had a broken wing butterfly. You can see our biggest profit potential would be to the upside into earnings. The stock coincidentally went significantly lower, down $27 here. We have no risk to the downside. Our trade was a broken wing butterfly at a 15-cent credit, so very small credit. We could close the position right now for about 30 cents, which would be a total net profit of $44 here. But I'm going to make a little bit of an adjustment here that will give us a lottery ticket type position here. So you can see the risk profile here on a broken wing butterfly. We are long this call spread, so we are long the 260 275 call spread, and we are short the 275 300 call spread. So we're short a wider call spread. If we can buy in the risk where it starts here at about 190, if we could buy in that risk, we'll have a risk-free position here. So what we do for this adjustment, so we go to the August expiration, and from here we have this $15 wide call spread, which means that we have risk after $15 above this short call that is part of our short call spread. So if we can buy this 290 and sell out of this 300 for a debit less than our original credit, which was 15 cents, we can have an equal width butterfly that we legged into here via these transactions on for a net credit. And this spread is a debit spread for a credit is what our net position will be. So here, if we can fill this somewhere around 15 cents or less, it'll give us back our buying power, which takes off the risk, the $1,000 or so in risk, and gives us this 260, 275, 290 risk-free butterfly. Now, this butterfly will hold some sort of value, which means that we are leaving money on the table, but it gives us a potential to realize up to $1,500 in max profit if the stock does bounce back to 275. Of course, very low probability of that happening, but a very high potential reward if it does. So we're going to route this order and see if we can get filled here at 11 cents. If we can't, of course, we can adjust this order. So there we go. So we got filled at 12 cents, which means that we have this risk-free butterfly, and we could show this on the analysis mode here, that will have no potential loss on it in terms of our capital at risk originally, but gives us a potential to make up to $1,500 if we do get a move higher to 275. If we do get a bounce, let's say to 240 or 250, this butterfly is going to hold some sort of value. It might trade at $1 or $2. So we have the potential to make a lot of profit on this position with a little bit of an up move in Tesla from where it's trading currently. We unfortunately didn't hit our lottery ticket, but it was a scratch trade nonetheless. This Tesla free butterfly that we legged into, if you remember, we did this on July 3rd, which was right around here when the stock was trading at 230, 240-ish. Let's see exactly where it was. 238, 39-ish here when we put this trade on. Now, again, with the butterfly you have risk to the upside in this situation with a call butterfly. So the stock went up, which is sort of good for the position because you want to get to 275. You just want it to happen kind of towards expiration. We get this move higher in Tesla. It then falls out of bed and falls all the way down to 200-ish for our which worked well for our adjustment. So our adjustment was to buy in that risk. So when we were looking at the spread again, we have a $15 wide long spread, $25 wide short spread, which means that we have $1,000 in risk. If we can buy in that risk for less than the initial credit, we have an equal width butterfly on for free. So that's what we did in this situation. You can see if we go to the market snapshots again, the price of Tesla on the 24th got all the way down to 218, 219, and 219.21 to be exact. At that point, we were able to buy in that $10 of risk. So we sold out of that 300 strike call, bought the 290 call, and did that for a 12-cent debit. So that leaves us with the 260, 275, 290 butterfly with the stock trading at 219-ish. On for a 3-cent net credit. So we have this equal with butterfly on for a credit, meaning we have no principal risk on the position. At that point, we had about 3 weeks-ish to get a move up to around 260 to realize some added value on that position, right? We actually did get that move to some degree up to 220-ish, around 220-ish to the upside. We didn't get as much as we needed to the upside to realize any value. So that spread, that butterfly, ended up expiring last week on Friday for the monthly expiration for August. So it expired worthless, which means we didn't capture any additional profit, but we also didn't lose anything on the trade. The trade ends up being basically a scratch, a net profit of $3. We'll consider that a green scratch of sorts, basically just a small nothing trade. But we had a small probability of hitting a very high profit potential because we bought in that risk. We had a 5 to 10% probability of hitting somewhere between $0 and $1,500 of max value. We ended up not hitting that mark. The stock did not go high enough, and we ended up getting rid of that position just via the options expiring worthless and ending up being just a small $3 profit. If you want to catch these trades live, tune in to Johnny Trades every Wednesday at 9:40 a.m. on Tasty Live. Peace.